Coming up on Market to Market, heavy rain replaces Arctic air. Farmers plant their tractors in front of EU headquarters. A professor hunts for unintended changes from genetic editing. And commodity market analysis with Shawn Hackett next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because a pioneer, our name, is our mission.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, January 26th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. You and I are known collectively as the consumer and account for roughly 70% of the U.S. economy. The consumer's continued willingness to spend, even with higher interest rates and prices, led the way in the economic outlook. Fourth quarter GDP clocked in at 3.3% from October to December. The measure of total output of goods and services marked the sixth consecutive quarter above 2%. The government's preferred measure of inflation added 0.2% in December. The year-over-year rate of the PCE was 2.6%. Durable goods orders were unchanged in December for items meant to last 3 years or more. When the transportation equipment sector is removed, the rate advanced 0.6%. Landowners in 5 Texas counties are being asked to move their livestock to higher ground because of excessive rainfall upstream over the last few days. Residents in the eastern part of the state have been inundated with rain this week, with more problems on and off the farm. Peter Tubbs reports.
Moisture was in ample supply in Texas this week. Schools were closed around Houston due to flooding and elevated risks as torrential downpours swept across the region. Rain totals between 2 and 5 inches were common from areas of Texas, Louisiana, Mississippi, and Arkansas. Snow is still on the ground in the upper Midwest from I-70 northward. Last week's cold snap damaged underground water pipes in Tennessee. Here in the western town of Mason, residents were without water for much of the week and had to line up for bottled water or to fill jugs from a spigot outside of City Hall. A change in weather patterns brought on warmer conditions, melting the more than 2 feet of snow in the Midwest. Temperatures above freezing in several states were combined with rainfall to move the process along. The drought monitor did reveal some improvements in conditions. For the first time since July 18, 2023, less than half of the country was listed in some form of drought. Even more improvement is expected next week, as much of the heaviest rain in the Gulf Coast fell after the data cutoff. Major weather systems in California led to flash flooding in San Diego. The cleanup of stranded cars and debris took much of the first few days of the week. The damage followed a downpour of 3 inches of rain in just 3 hours, setting a city record for the most amount of rain in a single January day. Another weekend of rain is expected along the West Coast. For Market to Market, I'm Peter Tubbs.
Farmers are looking for better remuneration for their produce, less red tape and lower costs, and protection against cheap imports. And it's increasingly becoming a major crisis for the government of France. Protests move from keyboards to roads and city squares as shouts intensified all over Europe. David Miller looks at the efforts that utilize some of farming and the farming operations' biggest assets.
Over the past 2 months, protests by European Union farmers have been held across Germany, the Netherlands, and Romania, with agricultural producers railing against new EU regulations and cuts to agricultural subsidies. Many of the protests have gone beyond carrying signs and chanting slogans to dumping manure outside government offices and blocking traffic. Last week, German farmers were protesting against planned changes to diesel fuel tax cuts, removal of a tax break for farm vehicles, and an increase in the carbon dioxide tax paid by everyone from farmer to urban dweller. This week, French farmers slowed traffic and marched in front of EU headquarters in Brussels, calling for higher subsidies and a reduction in what they call excessive regulation. Many of the country's farmers say they are struggling to make ends meet due to unfair competition from other countries, fallout from the Russia-Ukraine war, a high inflation rate, and cumbersome environmental regulations. As the columns of tractors slowly approach Paris, a few federal government officials have shown their support for farmers by asking local authorities to not send police to break up the protests. France is the EU's largest agricultural producer, with an annual output valued at $9.8 billion. For Market to Market, I'm David Miller.
If you say dolly in a word association exercise with someone in agriculture and science, their likely response is sheep. Dolly was a cloned mammal. And that project inspired more work, including for one scientist who is advancing gene editing and the study of potential side effects. Colleen Bradford-Krantz has our cover story.
The pig cells multiplying in this embryo contain a carefully introduced genetic alteration. By the time the story airs, this University of Missouri swine embryo will have become a piglet in the school's growing herd of genetically edited pigs. The herd's original purposes varied from growing organs for human transplant to studying transmission of diseases in humans and livestock. The herd's existence helped Mizzou researcher Kehoe Lee secure a $3 million grant from the National Institutes of Health. Lee's study, which also involves USDA research scientists, is designed to pinpoint any unintended consequences of genetic editing. His work will be shared with other geneticists to help them do the same.
We need to invest on developing systems to be able to quickly and accurately identify these unintended genetic modifications and develop a strategy to reduce these side effects, if any.
Although he spent much of his life in the U.S., Lee was a high school student in South Korea when a news item about the world's first mammal cloned from an adult cell, a sheep in Scotland named Dolly, caught his attention.
I really didn't know what to do as a career or even picking a major in a university. But then that year, the Dolly the sheep was born. And that got me really intrigued. And I thought, as a teenager, I wanted to do something unique and special.
His dad wanted him to become a lawyer, but Lee stuck with his plan to find a way into livestock genetics.
And so he was not happy that I went into animal science because as a businessman, he always thought I'm just chasing pigs. But then now that he sees more papers, news on xenotransplantation and how we can use pig organs to a patient, he's very proud of me. And whenever he sees the articles, he sends me a text.
Lately, Lee is focused on improving detection of and reducing any off-targeting events, which refers to those unintended consequences of using modern technology to knock out and replace a portion of DNA.
We may not want to talk about these side effects, but then as a scientist, we also want to be accurate. So if we say we introduce a targeted modification, we want that statement to be true. So my interest was to really figure out, okay, so if there is a side effect, what is the side effect? And that's not something that we want to really hide about. We want to further study that to develop a system that can minimize or even reduce these side effects.
The University of Missouri's initial study involved 15 of their genetically altered pigs. Many of the pigs had no off-target consequences. Others showed naturally occurring genetic changes, but 5 had off-target genetic modifications associated with the editing. While the off-target events didn't appear to create any problems for the pigs, Lee says it's always best to reduce or eliminate the risk entirely.
So these off-targeting events, many scientists intend to neglect or ignore because, and in theory, the type of modifications we introduce won't affect its phenotype. However, as a scientist, we really wanted to see then what is the level, what is the frequency of these side effects, then how do we mitigate it?
While the FDA has approved a couple genetically modified animals for human consumption, including salmon, monitoring of off-target events is also important as the nation moves toward the use of genetic modification in human medicine. In a historic move in December 2023, the FDA, for the first time, approved a genome editing therapy for treating humans, in this case, those with sickle cell disease. Sickle cell disease is an inherited and debilitating blood disorder affecting 100,000 in the U.S., particularly African Americans. The therapy, proposed to the FDA by 2 Massachusetts companies, will be used to modify the patient's blood stem cells using genome editing technology called CRISPR-Cas9, the same technology used by the University of Missouri with their genetically edited pigs. Lee is also working on another study looking at Alzheimer's in pigs, with hopes of finding a genetic answer for humans. University of Missouri researchers will also continue to work on genetic solutions for livestock illnesses like porcine reproductive and respiratory syndrome, or PRRS, a viral disease in hogs. Researchers there have already made progress toward building hogs' resistance to the disease.
So if we can enhance these animals, make sure that they don't get sick, and it's really to animal welfare, if they don't have to suffer from these deadly viruses. And it will really help producers to protect their investment. And if I could help on achieving those goals, that would be my goal.
For Market to Market, I'm Colleen Bradford Krantz.
Next, the Market to Market Report.
Acreage estimates and weather reports, coupled with high amounts of unsold grain, highlighted the trade. For the week, the nearby wheat contract added 7 cents, while March corn improved a penny. Thursday's trade erased much of early gains with improved Brazilian weather and slower exports. The March contract declined 4 cents and March meal shed $7.50 per ton. March cotton expanded by 51 cents per hundredweight. Over in the dairy parlor, February Class 3 milk futures increased 28 cents. The livestock market was higher. April cattle added $7.50. March feeders improved $12, and the April lean hog contract gained $4.62. In the currency markets, the U.S. dollar index increased 15 ticks. March crude oil expanded $5.02 per barrel. COMEX gold cut $13.60 per ounce. And the Goldman Sachs Commodity Index strengthened more than 19 points to settle at 557.80. Joining us now, regular market analyst Shawn Hackett. Hi, Shawn.
Hey, Paul, how are you? Thank you for having me come after all that wintry weather.
You know how I always give you a hard time about, we always welcome you in January so you can get the full Midwest experience. But it is that weather that has been a little bit of a story in the wheat belt. Is the freeze strong enough? Is there enough snow cover? Is that the big story in wheat for you this week?
Well, I think it is the big story, and I think it's going to be a bigger story coming up. We have the next 10 days supposed to be the warmest it's been for that period of time on the calendar in 100 years. A lot of the snow is going to melt. Even some winter wheat's going to come out of dormancy, and our work says cold weather, polar vortex, just like we saw coming back in mid-February, ahead of potentially snow coming in behind it. It could be a significant weather event. Many people ask, what's the catalyst to get the shorts out of the market? There's one catalyst right there for you.
So you're coming back in February is what you're saying with the next cold system. But you know, when you look at, I think it was January 18th, there was a low in wheat. Do you think that's going to stick and hold given what you just said?
I believe with the weather risks that we see and the fact that Russia continues to be backing off those exports, I think that is a good shot of being a low for a considerable period of time.
All right, so give me a little target here on this upside. What are you looking at?
Well, I mean, I think if you're looking at the charts, that $7 mark on overhead resistance seems to be a reasonable target that the market could go to. If we had a kind of a short covering rally, we got that 650, I think, on the last time we had a short covering rally. Wouldn't be a surprise on a really legitimate weather problem, we could get a little higher than that.
The weather is not always the factor in February, January in corn, but we're already looking to spring. Private estimates coming out. We might plant the second largest crop ever of corn. Is that the biggest weight on the market this week?
I mean, everyone's saying 92, 93 million acres. We get trend line yields, 3 billion bushel plus carry out, $3.5 corn, back to COVID lows. I mean, that's the fear in the market that has made everyone morbidly depressed, and why the market continues to struggle trying to gain any upside. But that is the story until proven otherwise.
We had 4 or 5 days of gains. Was that in sync with something else because of wheat pulling it along, or because it's not acting with soybeans, is it?
Yeah, I mean, the wheat market's definitely tugging the corn market a little bit. I also think, anyone that's looking down at Central West, Mato Grosso, and Brazil, worst subsoil moisture in 50 years at least, knowing that we're going into a situation where planting's probably going to be delayed somewhat, that crop's not going to deliver what it did last year, and that's something that the market's going to start to worry more about as we get to pollination in March and April down there.
We always talk about that weather window. When you keep mentioning that, does it even matter but that it's dry in South America and Brazil right now to us?
Well, everyone knows if you start with the tank empty, your chances for a good crop go down markedly. They're starting with the tank completely empty with subsoil moisture, and if they have a dry pollination season in March and April, there doesn't take much of that to have yields really cave in. On top of it, how many acres are the Brazilians going to want to plant in dry soil with the current economics of corn? Probably not as much as they would have otherwise.
This was a question a couple of weeks ago, was do we see a 3 or a 5 next in corn, in your mind?
To me, the way I look at the corn market, there's so many things that can still happen to change the narrative about the bear story. We're starting off with everybody bared up. We do that normally, by the way. We're going to have all this corn. We're never going to make it work out. I think there's a better shot at a $5 plus market than a sub $4 market, at least going to the early part of the growing season. I think there's too many risks to the upside given the current positioning of the funds.
You didn't even want to say the number 3. You said sub 4. I like that, Shawn. But if you would have sat in that chair a week ago talking soybeans, you would have been in that side of I asked Sue about being in the side of the boat with all the bears. Did some of those bears jump off this week?
Yeah, look, I mean, we're getting some. Right now, Brazil is harvesting their crop. What happens when that happens? Harvest pressure. We know that not every Brazilian farmer sold when they were supposed to. We know there's a storage shortage down there. Base is blowing out to the downside in Brazil, meaning we're going to have a really struggle with our exports until we put that crop away. It's not unusual to see harvest pressure when one of the largest exporters in the world is harvesting their crop. We still have another couple of weeks of that to get through before I think the bears will lose some ammunition that they currently feel they have.
So was this a sugar-induced rally this week in beans that then we kind of burned it off here Thursday, Friday?
Well, it's kind of, we know the crop's short from what it was supposed to be. Crop results keep coming out, and it keeps suggesting the crop's going to be lower than we thought it was going to be. That's a positive story once the crop's put away. So I think we're stuck between, hey, this is a smaller crop, but they're harvesting it. And so I think it's this back and forth action that we're probably going to continue to go through until we put the crop away.
Once we get it away, the dollar still gained this week, but smaller than last week. The U.S. dollar has not been helping exports. Do we need that dollar to be lower for the American soybean to get back into this market?
I mean, I think with the shorter Brazilian crop, we will get better exports over time as time goes on. But obviously, anytime we can weaken that dollar further, it helps our cause even further. And if the Federal Reserve is truthful that they're going to start lowering interest rates, and they start doing that, then I think that the dollar, trend here could really start to break hard to the downside, and that would be great news for anyone looking to sell more corn and soybeans out to other people.
Let's pause after the first 3 grains and ask this question. Let's go Dan in Oregon here, if we could, please. He asked us via X, what will the weather story be for the 24 North American growing season? Drought? Floods? Perfect.
Whenever we have a crashing El Nino into El La Nina, which is what we expect by midsummer, you tend to have flooding in the south, Texas, the deep south. You tend to have frost risks, which you already talked a little about, especially in May as well. And then you tend to have a hot, blowtorch, dry back half of the growing season, which really would be a significant issue for the soybean complex. So that's kind of the weather scenario we're kind of looking at this point. Doesn't mean disaster, but it probably doesn't mean making trendline yields again. It looks to me like we're going to come up short yet again, I think, for the 5th year in a row.
Is there a certain region that's more at risk for what you're talking about?
In this kind of a pattern, central north, central west, Canadian prairies. So it would be that quadrant there that would get the brunt of this kind of a hot, dry back half of the growing season if we're correct about what is to take place. Think of it like a few years back when spring wheat really got into a lot of trouble. We think that kind of a weather scenario year is what we have in store coming up this summer.
Cotton country had a whole lot of rain this week. Is that the only reason for a rally?
Well, that's one of the reasons, but another reason we've had some big numbers of imports going into China from here. Cotton prices in China have been breaking out to new 6-month highs. And they put a $300 billion, or propose a $300 billion stimulus to support the stock market and put more money in the hands of Chinese consumers. All these factors suggested that cotton demand, very cyclical to Chinese demand, had a reason to go higher. Remember, we had terrible crops last year, so supplies are not bountiful if we get any pickup in demand, which is what we saw.
We mentioned the economy off the top. Hogs up $4, feeders up 12, cattle up 750, S&P up to levels we've not seen before. Livestock driven by more tied to the S&P and the stock market than normal for you right now?
Well, that's a psychological thing. It always has been, but the pork cutout price up 10% in the last few weeks. The beef cutout price up 10% in the last few weeks, both going, and we're starting to see improved demand for dairy the last 2 weeks. Something has happened for the consumer in the last 2 weeks that we're getting demand into markets that typically tend to be very consumer-driven sensitive. And this, of course, the stock market going up always feeds into that narrative.
So that sounds like, to me, then the consumer feels like they have more money to spend if they're buying expensive cuts?
Well, we had 3 months of decline.
So you're saying you're factoring in the fact that we did decline.
Yes, we had,
and that's why we're finally entering back.
We got to a level where the value buyer who wants to eat beef, including myself, saw this decline in beef prices and said, "It's time for me to stop. Put more of that beef into the freezer." I think it was more of a value buying thing than anything else.
The consumer still thinks that way and still drives that. So now let's look. We also had pretty high direct cash again. Why? This wintry weather for the cattle, for example, you couldn't get the animals to where it needed to go. We had the improved beef cutout, better margins at the processors. You couldn't put the weight on. A lot of things, to create a strong cash market. And if we're going to have another round of this here in mid-February onward, we could have a repeat of what we just saw yet again. You like to be optimistic, Shawn. So I do. There is a camp around livestock that says there is a little bit, I'm going to use the word bubble, coming, and this could explode this summer. Do you fall into that camp? Historically, we've always made our epic tops in cattle when we start and mature the herd rebuilding cycle. Last time I checked, we haven't really gotten the herd rebuilding cycle going. That's still slated for mid-late this year. So it would fit into the idea that if we start to do that, that's where your tightest actual supplies come in. Well, next week, I believe we get a really good look at number of animals. I think we get the big cattle report that comes. Do you anticipate that being a big mover this time? It could be. I don't really think this particular number is going to drive the market dramatically. I don't think this particular one is going to be a big market mover. I don't anticipate that. Hog-wise, you mentioned a little bit about some of the cutout improvement there. Where are you sitting on this? China is or not helping our market for hogs? Well, China's not helping our market yet. The first thing that has to happen, the piglet price has to go up, saying that they're herd rebuilding, that they're done liquidating. We're starting to see that. Second thing is the hog price has to start rallying, so showing that the herd liquidation is over there. We're starting to see that. The last thing we need to see is big
pork imports from China saying they need to replenish because they're seeing a shortage coming up. We have not seen that yet, but 2 out of the 3 boxes have been checked off. We're watching for the third one to give us more excitement that China would be a driver. We think right now it's just value consumer buying, pork cutout going up, but we do think China's going to get involved in the mix later on in the year and provide a much better chance for hog producers finally to bring some more money home on the farm than what they've had in the last 6 months.
And we need to bring this show home. Thank you, Shawn. Good to see you again.
Thanks, Paul.
That'll do it here, but I do need Shawn to hold on because we are going to pause this analysis and continue our discussion about these markets in our Market Plus segment. You can find both analysis and plus on our website of markettomarket.org. We really, really do like hearing from you on your story ideas, your general feedback, and your favorite farm photo. Drop us a line about the program to markettomarket@iowapbs.org. Next week, a look at the expansion of no-till farming practices. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.